At the end of last March, one of Switzerland's largest banks, one of the largest banks in the world, Credit Suisse, met its end after 167 years since its foundation. And that just days after we saw the collapse of the Silicon Valley Bank, the second largest bank failure in the history of the United States after the fall of Washington Mutual in 2008. So naturally, people are reminded of the financial crisis 15 years ago, not just because of the Credit Suisse chairman's name being Axel Lehmann, but they're also reminded of the Great Depression of the 30s, which followed a major banking crash. Is something similar happening again? In Switzerland, while bread inflation is at 10%, while health insurance premiums are rising, and while the nursing staff is collapsing due to austerity measures, millions of people watched live as the government of Switzerland once again showed its face as the henchman of finance capital by orchestrating an unprecedented takeover of the Credit Suisse by the other mega bank of Switzerland, UBS, at a state-protected scrap price of just 3 billion Swiss francs, far below its market value. For this, the Swiss National Bank and the federal government provided a staggering 259 billion Swiss francs, which is almost 300 billion US dollars, and which is over 3 times the total government spending last year. The failure of Credit Suisse, or short, CS, sent ripples around the globe. Financial experts had warned that the end of Credit Suisse could drag the entire financial world into the abyss. And it is not without reason, since CS is, or I guess was, on the list of 30 global systemically important banks, GSIBs, which are considered too big to fail, often referred to as the global banking oligopoly. Switzerland may be small, but its massive banking power makes it one of the more dominant imperialist states. The Swiss financial sector produces 20 times more CO2 emissions than the entire Swiss domestic economy and is responsible for 2% of global emissions. Only 5 countries have higher numbers. Just 10 years ago, Credit Suisse was ranked 14th among 150 or so companies that control nearly half of the world's wealth, according to a model developed by researchers in Zurich. Its biggest rival, the other giant Swiss bank, UBS, was in 9th place. UBS itself had to be saved by the state in 2008 with 60 billion Swiss francs. It is hard to imagine the power UBS now has after the CS takeover, and especially the huge risk it carries. UBS's new balance sheet total is now more than twice the size of Switzerland's gross domestic product, making it a financial nuclear bomb in the case of another fallout. And since the bank knows by now that it will be saved by the state no matter what, it's unlikely it'll slow down significantly on its risky profit-seeking conquest. The Swiss state is a state of the rich, and its political parties reflect this class rule in their dealings with their big banks. In stable times, we are told that these giant banks are private companies that should be left alone for the most part. Billions of profits and bonuses, high risk, destruction of the environment. That's how the free market works. CS does what it wants. But then, when the crisis hits, they suddenly become the cornerstone of all society. If they fall, everything else falls, and we all have to step in. It's almost as if the plundering and pillaging finance capital is the very core of capitalist society. The funny thing here is that all of those who demanded bailouts in the US are the very same libertarian hacks who believe the free market should be left untouched, such as longtime associate of Peter Thiel and professional douchebag David Sachs. It should be clear to everyone by now who dares to do just a little critical thinking that the modern capitalist state is the most effective and most generous when it comes to the concerns of the rich. If regular working people demand things for them, the state never seems to have enough money and its liberal lackeys always scream about pragmatism and the budget, the usual nonsense. There were countless explanations and analyses in the past days, but criticism of the underlying system, the actual origin of the problem, is not even mentioned from the liberal left to the right. The best explanation came from the CS management itself and the Swiss Financial Market Supervisory Authority, short FINMA. Who's especially to blame for the disaster according to them? Twitter. Ultimately, scaremongering on social media is supposed to have crucially contributed to the downfall. The fall of CS is linked to the collapse of the Silicon Valley Bank, which occurred a few days earlier. The Silicon Valley Bank failure was itself largely precipitated by higher interest rates. We've talked in my previous video how the Fed increased the interest rate several times in order to fight record inflation. There, I mentioned how many CEOs and economists anticipated a possible recession due to these actions, since when interest rates go up, investments and employment go down. Many central bankers assume that the current inflation is explained by heightened demand, i.e., higher wages, high employment rates, or COVID handouts, instead of weak supply and record profit margins. But assume is too weak a word. Rather, it's the capitalist institutions reacting yet again in favor of the capitalists and pushing class war propaganda. And they are not stopping anytime soon. Since then, more and more evidence has appeared debunking the so-called wage price spiral. And now the Silicon Valley Bank debacle has been a result of that. But why? When the interest rates rise, bond prices fall. So the bank's bond portfolio lost significant value. The US government once again had to step in for a major bank and their rich depositors as investors and customers withdrew their funds in uncertainty. This also fueled uncertainty about CS. Lacking sufficient cash, Silicon Valley Bank began to sell some of its bonds at heavy losses, unsettling investors and clients. Then, after the major Saudi shareholder said that further capital injections for CS were categorically ruled out, the Swiss bank's stock price crashed. In the ensuing political fallout, representatives of the bourgeois parties blamed the bank's faulty management, miscalculation, bad corporate governance, greed, and the usual nonsense. Anything to distract people from the underlying logic of capital. It's the usual smokescreen tactic to isolate the problem to the bad apple, to the bad manager. It is regrettable that thousands of CS employees are losing their jobs, but all the countless employees who are directly and indirectly connected to the Swiss banking system and its crisis via a million threads are left out, not to speak of the millions of people directly affected by how the government chooses to always prioritize the rich over the workers. Finance Minister and Federal Councillor Karin Keller-Sutter did not even want to cut the bonuses at first. During the press conference, she said something both historical and incredible. Quote, "This is not a bailout. You can't make this stuff up." The SP, the Social Democratic Party in Switzerland, is in favor of strict regulation and restrictions on bonuses, so that this won't be repeated in the future. We hear from researchers at the University of St. Gallen, a prestigious business school in Switzerland, that bonuses as an incentive system are perhaps not ideal after all and leads to wrong behavior. Who knows? If bonuses are not ideal, maybe the profit system itself is the problem. And it is precisely this university that is now supposed to clear up the debacle. It's no joke that the finance minister has commissioned the designated rector of the university, Manuel Amann, whose new center was sponsored by Credit Suisse, to investigate this very bank. Where else should the millions of the bonuses go if that would be forbidden to the CS? Even if the former manager Brady Dogan would not have received his annual income of 80 million francs, bank employees would not have benefited from it, but probably just the shareholders. I do not think that anyone who seriously looks at this issue can say that this would change anything fundamentally. A prominent left liberal economics journalist, in an interview with the Social Democrat Party leaders, agrees with this. It is clear that it's not the defenders of the current system that need to be asked here. Explanations are needed which go a little deeper. The Credit Suisse has been very important for the history of Switzerland. At its creation, it had a different name. Alfred Escher from Zurich, whose monument stands in front of the main train station, founded the Schweizerische Kreditanstalt, short SKA, in 1856 to finance the Gotthard Tunnel, the world's longest tunnel at the time. The Gotthard Base Tunnel, which opened in 2016, is the world's longest and deepest rail tunnel in the world. During World War II, Swiss banks, in the Swiss pseudo-neutrality manner, aided the Nazis in their efforts to manage their stolen wealth. It's estimated that the Swiss National Bank held close to $10 billion of Nazi gold, much of it looted from Jewish people. The SKA didn't miss out on dealings with the Nazis. In 1977, the Chiasso scandal breaks when the SKA branch in the Italian-speaking province of Ticino accepted tax evasion money from Italy for years. The outrage of the media and the parties in Switzerland is big. Everyone calls for more regulation. However, SKA turns the Chiasso scandal into a success. In 1979, it emphasizes with a confident undertone, quote, "Our bank has proved what hard knocks a private sector company can take without imposing losses on the public, as would almost inevitably have occurred with state institutions." With the onset of so-called neoliberalism, the credit union shoots itself into the heights of world capitalism. Its bankers develop a new level of self-confidence. They became pioneers as the financial industry became the central player in capitalism. Neoliberalism means greater privatization, deregulation, outsourcing of jobs, and a bigger role for the financial sector, driven by rapid advances in various communication technologies. As early as 1978, the Swiss Liberal Party, FDP, who received and still receives lots of money from the Swiss banking sector, invented the slogan, "More freedom, less state." As expansion grew rapidly, the SKA acquired the US investment firm First Boston in 1988. This turned the investment bank into a cash machine, and top bankers received salaries and bonuses in the tens of millions. The CS management under Lukas Mühlemann, one of the most influential Swiss ideologues of neoliberalism, pushed the expansion further and advised the Federal Council to radically restructure Switzerland. Energy supply, transport companies, schools, radio and television, everything should be privatized. But the phase of neoliberalism did not begin because its proponents suddenly had the better arguments in the marketplace of ideas. No, it was the natural reaction of capitalist states after the weakening of profit margins, which began after the short boom phase after World War II. And, obviously going along with it, they needed to crush the stronger labor movement, which was hindering capital from exploiting higher profit margins. State enterprises were privatized, wages had to fall, and the bargaining power of workers had to be broken in order to drive profit rates back up. Once again, it was confirmed that in capitalist politics, it is not the needs of the majority that are considered, but the wishes of the small minority of the wealthy. During the 2008 financial crisis, Credit Suisse had to be propped up by the major Saudi shareholder Olayan and the Qatari Sovereign Wealth Fund. The other big bank, UBS, had to be rescued by the state with 60 billion Swiss francs. Swiss politicians resolutely said that this should never happen again. In the context of increasing competition from the US and Asia, under international pressure, the crisis-ridden banks had to get rid of the infamous Swiss banking secrecy, which was a serious blow to Swiss capitalism, as financial centers in Hong Kong and Singapore grew stronger. Credit Suisse permeates Switzerland and is present not only on ski caps and sponsorship of sports and culture, but also as the manager of illicit funds of the most corrupt heads of state around the world. The SKA has laundered millions of dollars of international drug gangs in the so-called pizza connection, and hundreds of millions of dollars of brutal, reactionary former president of the Philippines, Ferdinand Marcos. Yet, despite many calls for regulation, it never really became dangerous for the bank. The then Justice Minister and first female federal councillor Elisabeth Kopp was forced to resign, and several financial supervisory authorities exposed Switzerland as an unregulated offshore center. In 2014, CS was sentenced to pay a fine of $2.6 billion in the US for aiding and abetting tax evasion, and in 2016 it had to pay a further $5.3 billion for illegal transactions in connection with mortgages. There was no trace of so-called risk awareness when it lent around $1 billion to two state-owned companies in Mozambique in 2013, thereby becoming part of a corruption scandal that drove the country into bankruptcy. The lawsuits against CS in this case have not been concluded to this day. Credit Suisse directly participates in environmental destruction and climate change, whether by financing coal mining projects in Indonesia that lead to the destruction of wetlands and forests, or by its leading role in financing the fracking boom in the US and lending to large pipeline companies. CS appears insensitive to the climate impact of its investments, possibly related to the fact that it became increasingly dependent on donors from the oil and gas producing states of Saudi Arabia and Qatar. And of course, more importantly, because it's driven by the profit imperative, which under capitalism trumps all other concerns. Then, 2 years ago, two scandals finally shook the bank's reputation permanently. CS had to freeze several funds because investments by the financial company Greensill turned out to be highly risky and meant losses in the billions for CS customers. A few weeks later, the bank announced a loss of 5 billion Swiss francs on transactions with the New York-based hedge fund, Archegos. Some people make it seem like the collapse was brought about by panicking on social media earlier this year, but as we can see, there's over a century of history that came before that. But all of these events are not enough. We need to look at the systemic forces behind the curtain. The banking sector and the financial sector in general perform central functions in capitalism. Banks make it so that companies do not have to keep their profits in a vault and that people don't have to hoard their savings under their bed. They manage the wealth of rich customers to increase it for a fee. They also trade with their own money, facilitate international payments, mergers and acquisitions, advise government institutions, and so on. Giant banks like JP Morgan Chase, CS or UBS do all of these things, which is why they're called universal banks. But most crucially, they centralize money. Banks centralize money and make loans to companies and individuals to expand and accelerate production and reproduction. The banks then make a profit by charging higher interest rates on their loans than on bank accounts. Let's look at a simplified example. Marx calls the bank advancing interest-bearing capital the money capitalist, and the company producing something, say chessboards, the functioning capitalist. The functioning capitalist buys commodities on the market, so wood and labor power, which increase in value through the production process, out of which surplus value is appropriated by the owner. But this can only be realized if the chessboards are actually sold on the market, through which the increased value expressed in money becomes a reality. The money capitalist is the owner of interest-bearing capital. In return for making some money available to the chessboard company, who needs to, say, expand production, the bank receives interest. Marx defines interest as, quote, nothing but a portion of the profit, i.e., of the surplus value, which the functioning capitalist, whether industrialist or merchant, must pay to the owner and lender of capital. Quote, the money capitalist participates in the exploitation of labor as represented by the functioning capitalist. It's interesting to note that nowadays, much of the money in circulation is created out of thin air by private banks. Most people still think that banks act as middlemen, using the money people have in deposits to make loans. But that's not entirely true. Banks only have to keep a small percentage of deposit liabilities as liquid assets as a reserve. The rest can be created electronically by crediting the borrower's bank account with a deposit in the size of their loan. And this makes completely sense from the perspective of capitalism. Why should money making be constrained by the reserves a company actually has? And why should money just lie around without being integrated in the capital accumulation process? However, this just makes everything more explosive. There's a massive amount of debt in the world, without guarantee if the actual producers can pay it back or not. And that's only where the madness starts. More often than not, the interest-bearing capital appears in the form of shares and bonds. A bond pays interest, and a share usually pays a dividend. Both are a portion of the profit, though bonds can also be government bonds. Bondholders thus often have massive influence over corporations or states. These securities can themselves be bought and sold on the financial market, and their price has mostly little to do with actual production, which is why Marx called them fictitious capital. You can see how when speculative bubbles burst, they wipe out hundreds of billions of dollars overnight. But all of this makes it seem like money can increase in value just by itself, outside the production process. Quote, "It becomes a property of money to generate value and yield interest, much as it is an attribute of pear trees to bear pears." This illusion is expressed in the popular and absurd saying, "Let your money work for you." Paper doesn't work. People do. Marx therefore described interest-bearing capital as the, quote, "most superficial and fetishized form of the capital relation." But financial corporations are not, as many claim, a disease that fundamentally undermine real and productive capital, quote-unquote, the real economy. And if we would only restrict this sector, we would have a good, healthy capitalism. No, the financial players are both a logical consequence and a central building block of the capitalist mode of production. Hence, why all these different forms of capital are increasingly intertwined and centralized. Money capital, industrial capital, and merchant capital depend on each other, and its representatives form the financial oligarchy. BlackRock owns part of Credit Suisse or Apple, which in turn let part of their wealth be managed by BlackRock. Corporate leaders sit on each other's board of directors, advise central banks, and so on. Finance is crucial. It facilitates and expands capital accumulation, but it also intensifies the contradictions within capitalism that lead to crises. Quote, "The credit system accelerates the material development of the productive forces and the creation of the world market. It is the main lever of overproduction and excessive speculation in trade." However, and here comes the crucial point, while speculation in the financial markets is more obvious and quicker, it is not really fundamentally different from capitalist production in general. Both confront an inherently uncertain future, and both seek to achieve the same thing by investing their respective resources, maximizing profit. And it is this fact which makes it impossible to just regulate away crises under capitalism. Martin Wolf in the Financial Times expresses the contradiction when he writes, quote, "Banks are designed to fail. This is how, crisis by crisis, we have created a banking sector that is in theory private, but in practice a ward of the state. The result is a system that is essential to the functioning of the market economy, but does not operate in accordance with its rules. This is a mess." Production is not planned according to the needs of humanity and the environment, for consumption at the point of use, but for the sale on a market to make money. Production is organized through the chaotic market in order to grant the large owners the liberty to exploit workers and destroy nature. This risk is greatly magnified as global debt grows, since the probability that the accumulation from interest-bearing capital doesn't match with quote-unquote actual accumulation constantly increases. Total global debt is now over $300 trillion US, which is 345% of total GDP, up from 255 trillion before the pandemic. By blaming the failure of Credit Suisse on bad risk management or social media scaremongering, we naturalize the capitalist logic and thus the very basis for today's and all future capitalist crises. So everyone's calling for regulation, but how has that worked so far? As Michael Roberts explains, regulation cannot be a solution because first, even banks that play by the rules keep going bankrupt. Second, banks keep fudging the rules and try to mislead regulators. And third, capitalist governments are under constant pressure to relax rules that discourage investment or lending. Regulations are always discarded by the state of the rich when they do not meet the interests of the capitalists at the appropriate time. We've already talked about neoliberalism. The world's top financial regulators at the BIS acknowledge that, as stated in the Financial Times, quote, "The only way to entirely prevent a bank run would be to require them to keep all of their deposits in highly liquid assets." However, as Claude Wampach, member of the Basel Committee, said, quote, "But then you wouldn't have banks anymore." What this means is that banking would have to be a public utility and not a means to speculate and make money. But that's obviously out of the question. But letting a bank fail by itself is out of the picture as well, since this bears the risk of political disaster, which would go along with great social upheaval and instability, both in Switzerland and around the world, which the ruling class fears and which it can only try to delay. Now seemingly all the media outlets and politicians are giving the all-clear signal, saying everyone should calm down because these are just one-off cases in an otherwise stable banking environment. However, a financial collapse always starts at the weakest links. European Central Bank Chief Christine Lagarde told investors that there would be no trade-off between higher interest rates and financial stability. Of course, by financial stability, she only means the wealthy. But people are not sure about that. Bank lending in the Eurozone is contracting rapidly. The ECB itself admitted that banks have tightened lending on business loans the most since over a decade. The newest Fed numbers show that banks in the US have lost hundreds of billions of dollars in just 1 week. The Fed's own predictions for economic growth have been lowered, and the new bailouts do not exactly help with inflation. Now, it is unlikely we'll see a bank run among huge banks like Wells Fargo. But the key point is to remember that a crisis in the banking sector isn't to be seen as something detached from the rest of the economy, as it is frequently presented by many people. It's the recurring underlying causes of overaccumulation of capital and the falling profitability of investment, which, as we've seen with Silicon Valley Bank, can be very dangerous, especially in combination with higher interest rates. If the next crash doesn't arrive soon, it'll most certainly arrive soon afterward. Ultimately, there's nothing governments can do to heal the inherently capitalist problems of profitability and overproduction, and it is only a matter of time before the new crash comes around. The foundations of the system are full of dynamite. Crises can be triggered on any front. What appears as a financial crash is in truth a crisis in the underlying social mode of production. The enormous instability of the Swiss banking center will continue, with the new mega behemoth of the financial world, UBS. Switzerland is extremely vulnerable to any of the coming capitalist earthquakes. Quote, "Every factor which works against the repetition of the old crises carries within itself the germ of a far more powerful future crisis." Switzerland is at the beginning of a long period in which class contradictions are very likely to intensify rapidly. The social stability typical for Switzerland is not guaranteed for very long. The proletariat of Switzerland must prepare itself for the coming crises with revolutionary organization. For only the overcoming of the rule of capital can solve the problem, not regulation or a better way of dealing with Twitter.